Okay, so I'm Trisha with Easy E-mini Trade, and I'm going to show you how to trade the value areas and the order flow for higher probability entries and exits. And first off, I do have to say that trading is risky and don't trade with money you can't afford to lose. Okay, so we got that out of the way. And Maria Russos is here. She is the owner and creator of the tools here. She hired programmers. She knew exactly what she wanted when she hired the programmers. It took her a couple years and lots of blood, sweat, and tears to get this final product. And I've been using it for about a year and a half now, and I'm really happy. And that's my affiliation with Maria, is that I use her tools, I own her tools, and I love the tools. So that's what I'm going to share with you, is how I'm trading them. There's so many different ways that you can trade them. And Maria is here with us today, so if you have questions, you can type them in the question box, and she will answer via the keyboard. And at the end, we will allow time for questions and answers, okay? We're starting at 4:15. It is 4:15, Jim. 4:15 Eastern. Okay, great. All right, so let's go here. So, as mentioned, introduction to trading order flow and value areas. Now, a lot of you have seen a lot of my order flow presentations. So the first couple slides will look familiar, but what I did was I am going to use the NQ for this morning and show you how you could have traded this morning. And then what I'll do is I will use market replay so you can see how the actual order flow comes in, so you're not looking at a static chart. Because order flow is constantly moving, and that's where a lot of people run into some confusion as to how to read it. So market profile is a vertical graphic that displays price and time, and this allows you to see at a glance the price levels that have the most concentrated volume. And the reason we care about the price levels that have the most concentrated volume is that generally price is going to get stuck there. It's creating lots of congestion, a lot of support, a lot of resistance, so that's why we care. And we can use the market profile in the tools that I have from Maria based on the VWAP, which is volume weighted average price, TPO, time price opportunity, or volume. And I like the VWAP, and other people might tell you something different, so that's the beauty of it. There's more than one way to make this work for you. And if you're not familiar with market profile, and I mention this all the time, and I just put it out there, Peter Steidelmeier was one of the market profile developers, and it was released to the public in 1985. And you can go to that link I've got there. Now, you're not going to be able to click on it, but if you just go to cmegroup.com and then on search, just type in market profile, it'll bring up an interactive tutorial on market profile that you'll find helpful. You can read his book. I prefer Mind Over Markets by James Dalton. That I found a little bit easier to read, and that will get you the gist of it. And I mean, there's so much information on market profile that we could dedicate hours and hours and hours just to that, and I'm not interested in doing that. So this is generally what everybody thinks of when they look at or hear market profile. And like I said, these the first couple slides are a little older. This is from November 19th, so not real old, but a couple weeks. And each day it creates a market profile in showing us where the higher concentrations of volume are. So it's going to basically put a mark at the price level for whatever time period you're choosing to draw the market profile on. So at a glance, this is that week up to the 19th. So it's like from the 15th to the 19th of November. So this is covering all those days. And so in just at a glance here, you can see pretty easily that if you were looking to take a trade, let's say on a smaller time frame or tick frame chart in this 60 area, you're probably going to have some trouble. But if you were to take something under all of this congestion, you probably would have a good chance of being able to have a nice move down to the next high volume area right here. So this at a glance, you can get that information. Mainly what we care about are the value areas that are created from the market profile. And I'm going to show you that as well. So on the tools that I'm using from Maria from Trade Order Flow, this is the NQ, and this is from the 19th of November as well. And I'm using this because I already had this labeled, so I was being a little bit lazy. So we can easily see at a glance the yellow area, the blue area, really nice visual. And so the yellow area is the fair value area, and the fair value area is the area where the majority of the trades took place, and it's constantly changing based on the price action. So as we create new highs for the day or new lows for the day, this is going to get wider, and our fair value area will get bigger, and it's continually and constantly changing. And when you look at this, you're going to see right where we come to the blue area here, this is considered high value area 1. Right here, when it comes outside the blue, that's a high value area 2. On the downside, this is a low value area 1, low value area 2. And this purple line that runs smack dab in the middle of the fair value area here is the point of control. And most of you might know it as POC. Now I have a stochastic on here, and I'll show you the settings on that, and I'll show you why I have it on there and how I use it. And most of you who are familiar with the webinars I do on order flow know exactly why I use it. And down here we've got the previous day high value area 2. So it's going to plot the previous and the current day's information if you want it. And all of this is you're able to turn off with the click of a button. You can put a whole lot more information on here than I have on here, and the same on the order flow chart. And you're looking at it the way that I like to look at it. Over here we've got the volume for the day leading up to that point, and then this black outline here is cumulative volume. So this will take however many days that you have set on your indicator. It will display the cumulative volume for that number of days. So you'll be able to see pretty easily, just like the market profile that I showed you on the previous slide, where the higher concentrations of volume are. And I'm going to show you why that matters. And so this is also, and I wanted to give one, like I said, this is still an old slide. This is from the 16th of November, but I wanted to show one. Actually, let me go back. When we're trading these value areas, what you're going to find is that price is generally going to go from the low value area here to the high value area here, and the low value here. So it's a constant back and forth. You may have heard the term coast to coast. Maria uses that all the time, where it's going from one side to the other. Now that could be from the edge of the blue to the upper edge of the blue, but mainly what you're going to see on most days, because most days we don't have a strong trending day, but and on those days we're going to find that price is just going to meander back and forth. And I'll show you that today because we had that today as well. But on this slide, you can notice that we're well above the fair value area, and we're actually outside that high value area here. So where you see this black outline here, this is the high of the day. So it keeps, obviously you can see it's creating a new high every time it moves higher. And so when price is moving, we're always looking for a way to get in. And what you'll find is that if you have a strong trending market, price will give pullbacks generally to this area here. So you can see it moves higher, pulls back, moves higher, doesn't quite hit it, but pulls back, moves higher, pulls back. Now if it was in the blue area here it likely could do the same thing, except it would move higher, pull back to the fair value area, move higher, pull back, move higher, pull back. So what you'll find is that if your chart with the fair value areas on it, if you have them outlined like I have here, if you have a strong slope on your high and low value areas, whatever slope direction that may be, those are the types of environment that you're looking for pullbacks. If you see something like this, now this was pre-market, so it's going to be pretty sideways, but if you see that your value areas are just kind of sideways with no real strong direction, then those are the days that, or at that time anyway, where price is probably just going to go from one end here to here to here, and that's tradable. So there are lots of ways that we can trade. We're looking to take a break of the fair value area, outside the fair value area here, our high value area here. We can take a buy at a break of the fair value area, the value area here. We can take a short on the break of the low value area here and here. We can do the same around the point of control. I'm not too much of a fan of taking trades around the point of control because price very often gets stuck there. We can take the breaks of the previous day. We can take breaks of the swing highs and swing lows, which you'll see on the order flow chart in just a minute. So I'm going to show you all the ways that we're able to trade them. And so, as mentioned, the value areas from the market profile are going to give us those value areas. And the reason we care about them is that very often price is either going to hold those areas and roll over or break out from those areas. And that's where the order flow comes in. So the market profile is going to tell us where the value areas are, and the order flow is hopefully going to tell us who's in control at the time, the buyers or sellers. So if you're coming up to a high value area, for example, and you have the buyers coming in, you can take it as a breakout. If it gets up to the high value area and you see sellers coming in, you can take it as a short off that area. So that's what we're going to show you today, is how you can decipher all that. So this is the order flow, and again, this is from the 19th as mentioned, but I've got the whole morning loaded for the NQ that we'll go over this afternoon. And there are lots of different ways that you can view the order flow chart. I choose the bid-ask histogram option, and I'll show you on the market replay chart when I load that. You have lots of options, but I like this one because it is giving me the bid-ask in each bar. And I'm using a 5-minute chart on this, and then on my VWAP chart, I'm using an 8-range chart. And it doesn't really matter what you're using for your VWAP chart because it's going to be the same. It's based on price. So we're not looking usually for a bar to close above or below these areas. We're just looking for a break of them. So as mentioned, it really doesn't matter what size chart you use on this, in my opinion. This is what I prefer. And then on the order flow, a 5-minute works well because it's basically giving us a bias based on the 5-minute chart as opposed to a smaller size chart. And you can use a tick chart, a range chart, whatever you like. You can use this methodology on anything that you trade, the E-minis, equities, whatever is your preference to trade. So everything's the same no matter what you're trading. Now you can use a smaller time frame if you like. The 5-minute does work well. I went kicking and screaming in the beginning using the 5-minute because I just thought it was going to be too big. And what I found was that it really worked the best for me because it was giving me a bias based on the 5-minute chart. And so over here on the left, we have our volume profile, and the red are the sell orders that have come in, and the green are the buy orders. And I'm just going to make this simple. And then the different price levels here in this blue the darker the concentration, the higher the volume there. And there are lots of different ways that you can display this as well, or choose not to display it. This is also going to show your value areas just like what was on the VWAP chart that I just showed you. So this is the point of control. And the way that this is read is just like on your dome. It's on a diagonal. So if I were looking at, let's just say here, we got buyers on the right, sellers on the left. So if I was looking at this 45, for example, right here on the left side, that would be the sellers, and that would be read on a diagonal up here to 12 buyers. So it's always read on a diagonal, just like I said, like your dome. So we're just going to jump right in and start with today. And these are still screenshots, but I'm hoping to get through this pretty quickly, and then I'll put market replay on so you can see how this actually forms as price is occurring, not knowing what's coming to the right. So this is a little early for me down here. This is just about 9:31. So basically what we would be looking for, as mentioned, is we could take breaks of the low value area here for a short. We can take bounces off this area for a buy. We can do the same on this red plus area here. That's the previous days. And the same on the blue area here, and the high value area here and here. So we could take breaks of all of those. On the order flow chart here, you see these blue arrows up top here, and then you'll see this, I know I'm marking it with a red arrow, but down here where you see this red arrow coming out to the right, those are swing highs here and swing lows here. So you could take the break of those as well. So here at about 9:35, I usually look to start trading or take my first trade. It's usually around 9:33. That's just me personally. I know people will jump in right off the open, but I like to give it time for the market to figure out what the heck it wants to do, which direction is it going to go, or is it not even going to go in any direction, is it going to go sideways. So right here on our order flow chart, I actually want to move back one here, and I'll just explain it here because you can see the whole picture here. I've got the delta on my first line here. You can see it down here, and I eliminate a whole lot of information that we're able to put down here. We could put the bid ask here. We could put maximum delta, cumulative delta. There's a whole lot of information we can put down here. I really don't care about any of that. I want to look at the delta, and if you're not familiar with the delta is the difference between the number of buy orders that came in compared to the number of sell orders that came in. So if you see a negative here, for example, minus 246, that means we had 246 more sell orders on this 5-minute bar than buy orders. You can see we have here 120 on this bar right here. So that's telling us that we had 120 more buy orders. And so ideally, we would like to see a negative delta for taking a short, and we'd like to see a positive number for taking a buy. But it's not always that simple. I wish it were, but it's not. So what you would look for also is what direction is that reading going? If, let's say this is positive and you're looking to take a buy, but this positive number, like here we can see it's 120, but let's say it started at 420. I'm just making that number up. Obviously, if it started at 420 as a positive delta and you see it getting smaller and smaller and smaller, you're probably going to think twice about taking the buy. Even though this is still positive, it's the question you have to ask yourself is, where did it come from? So it's all relative. Is that 120, higher than where it started, or is it lower? And you can see these orders coming in, which you'll see on in the market replay. All right, so I wanted to show you that so you had the whole screen to look at. So looking here on my left, I've got the order flow as mentioned. On the right, I've got the VWAP chart. And I can see volume clusters really easily on this 5-minute chart. As you can see, I've got one circled here, and this is the bar that was forming from 9:30 to 9:35. And that's right where this short sets up. So what I would want to see is, if I was going to take the break of this low value area here, and as I said earlier, I didn't or wouldn't be interested in any of these here because it's just a little too early for me. So here we get a break of this red area here. You see this, the pluses there. And then here we also get a break of the low value area. So we could take a short on either one of those as long as we see sell orders coming in. So for that first one marked A, here you can see the low value area is where this orangey ribbon is. So that's where this one right here is setting up. The one breaking the plus sign that I have marked there, and you can use a line, you can use whatever you like, but the one breaking that is right around the 85 area, which is right here. So if I was looking at this, and as I said, you're going to see these orders coming in real time. If I was looking at this, I want to see the sellers piling in. So if, let's say you took the break of this red area here from the previous day's value area for a short in the 85 spot. So you take that, let's say, and you can see we have a high concentration of sell orders right in that area, but then you don't see the sellers piling in. You can see they're coming in, but they're not piling in. And so chances are this started out probably as a much bigger number than 225 and then diminished as it was holding this area here at the low value area. And so that would give me a heads up that, you know, I might only get maybe, you know, 3 points out of this or something along those lines. And I can still look at previous areas of support and resistance. I can always look to my left. And so here at the break of the low value area, and then the next bar starts to form because this is almost immediately, it hangs here and it hangs here and it hangs here and it's not going. And you can see this would give me a heads up right here where I've got a large number of sellers here in comparison to buyers. I have 189 to 75. You can see I've got this real dark color red. So that's telling me that there's, you know, this is a high volume of sellers on this bar compared to all the other bars, compared to all the other price levels on this bar. So when you see that and then you don't see them piling in underneath, that's a good indication that price is probably going to change direction. So if I was short, I would be looking to tighten my stop or take something off the table. Now here's where the stochastic comes in, and I forgot to show you the settings that I use, so let me just show you those real quick. So this is just a simple stochastic. This is one that somebody shared with me that colors red and green, but you're not going to have access to that. You're just going to use a regular old stochastic, and you're going to use 3 for your D period, 14 for your K, and then 3 for your smooth. I always set it to false on calculate on bar close, and I use 80 and 20. 80 is overbought and 20 is oversold. And then I'm only looking at the K line for this particular because all I want to do is be able to see divergence. So what I do on the D is I just, and this is for Ninja, all these tools are for Ninja, but everybody's got a stochastic no matter what platform you're using. So what I do is I choose the color transparent, so I'm only looking at the K line. If you don't have that option, just color the D the same color as your background of your chart, and then you won't be able to see it. Okay, so the reason I wanted to get to that was, here's where my stochastic comes in handy. So we can also buy the bottom and sell the top, but obviously you don't know what the top and bottom are very often until after the fact. So here, while we're holding and not going lower, you can see price gives me a lower low here than here, while on my stochastic I have a higher low here than here. So that's giving me a heads up that I'm probably going to get a bounce here. Doesn't necessarily mean that price is going to change direction completely, but it's a good indication that we're going to get a bounce of some kind. So I don't even have to wait for this to trade back into the fair value area to buy it. Now, a lot of people will stay away from taking trades in this yellow area. That's going to be a personal preference to each individual person. But I would not hesitate to buy this off the bottom here, off divergence, because I know I'm going to get some kind of bounce. And what would go through my head is, okay, do I have the buyers stepping in? So here's where we're setting up for the buy off divergence on this 5-minute chart. So what I would probably do is I would look above this high volume area here where we had all these sellers. Now mind you, this is a static chart, so it wouldn't have looked exactly the same during live trading, but this still would be showing a lot more buyers in this area, buyers in this area than sellers above this area, right above the 89 and 145. So here's a bunch of sellers. So I could put my buy order in just above that, because if it trades through this area here where we have a lot of sellers, chances are it's not going to follow through, because we can see that we don't have a whole lot of sellers stepping up here, and we've got positive delta. So I could put my buy order right above that high volume level there, above that 83, and I could take that. Now I can use a pretty tight stop. I can use a couple ticks below where we had this high volume node of sellers, or I can use under the low of the bar that got me in. That's going to be a personal preference as well, but in this instance you can pretty much use a few tick stop, because if it manages to get a whole bunch of sellers coming in, then it will go lower. So what would be going through my head is, if I buy this divergence, I might get stuck on this low value area right here, or I might get stuck on the previous day's value area here where that red dot is, and then the point of control, and then we would be looking at the high value area at the opposite end. So if you're worried about taking a divergence trade or any trade off the bottom here, you can wait until you break back into the fair value area and place a buy order here, as long as you've got sellers coming in. So that would be right here where we've got the C marked on the order flow chart. So we would want to be seeing the buyers coming in. Now when this is forming, we have what's called an action bar, and you're going to see that in the chart replay, where we can see the more aggressive orders coming in, which is really helpful, because you can just look for the flashes of red or green. And on the way up, this would be the area where I would be thinking, okay, I might get stuck there, because you can see we had some congestion here. Obviously I'm not showing the whole left side of the chart here, but looking here at the volume on my left, I can see that this was a high concentration of volume here. I can look over here on the right side of my entry chart, and I can see I've got high volume node here, nodules here. You can see that, I'm sure, pretty easily. And then the black outline is showing us cumulative volume for previous days. So there's a lot going on in that area. So I know if I take either of these as a buy, I could get stuck there. And then if I can get through this volume area here, then the next likely area would be the next area where we have that nodule popping out, which would be here. And then the next one here. And then if you have an opening again here, we call it suction. It gets sucked up to the next high volume area and then sucked up to the next. We love to see something like this up here, where you've got this big opening here between this high volume area and this high volume area, because generally what will happen is price will easily get sucked up, in this instance here, sucked up to that next high volume area. So I can take the buy here at C, as mentioned, as long as I've got buyers coming in, I've got positive delta. And I can take the buy here at D, a break of the red area here, which is right here. And as mentioned, this would be my area of concern, and then the point of control right here. And then I could take a buy up here at E. And right here at E, you can see this is at the high volume, the high value area 1. Right there, and right there you can see my little orange ribbon. And what I like about that is you can see we have a bunch of red here for sellers, but nothing really comes in under that in the way of sellers coming in. You get the buyers stepping up. Now what would go through my head here is that, okay, I see the buyers coming in, but they're not stepping up in this area at 92, 50, 93. So I might be a little bit hesitant about taking that until I saw more buyers coming in. But as long as your delta is getting bigger in size on the positive end, then you're pretty safe to take that. Now you can see at the edge of the value area here and here how price just kind of hangs there and consolidates. And very often that will happen. But once it decides to break out from there, you can see that we get more buyers coming in up here. And you can see following that, I'll show you here in just a second on the next slide, but the buyers just pile in, as you can see here on the chart, immediately following that out, obviously, but not right here. So if you're worried about, let's say your delta isn't what you need it to be, or the delta's positive, but you're seeing more sell orders come in than buy orders, then most of the time in that areas of those first high value and low value areas, you usually get more than one chance to get in. So as you see it holding and holding and holding and holding and still not rolling over, and then you see buyers come in, then you're getting many opportunities to just go ahead and buy that high value area there. Now, even if you took it here at E, you would have never been stopped out down here on this retracement. So whether you got in here or on any of these bars here, as long as you had the buyers coming in, you could take that. Then here on F, we break this high value area here. We have the brown line. We could go ahead and take that right there. We could take the break of this blue line here, as long as we've got the buyers coming in. And again, if you're worried about it, then usually you're going to get a couple opportunities in that area. And what I use is I use buy stops and sell stops. You can use stop limits if you like, but you can place your order right above that high value area and just wait it out, or you can wait to see if it goes, then it doesn't go, and then it eventually goes. So you have, like I said, you have a couple opportunities to get in there. Maria, I think there might be a couple questions if you wanted to answer them. These tools are purchased, Vic, through trade order flow. So that would be the only way that you can see the order flow on Ninja. It's not something that's standard in most platforms. So I'm going to flip to the next slide so you can see F and G. Here we go. So here's that F and G that we were just talking about. So we could buy it here, we could buy it here, we can buy it here. And we got positive delta, as mentioned, but it was pretty small, right? 134 positive delta. So you could wait until you see more buyers coming in. Now, obviously, we have a huge number here. We have plus 721. And right here is where you would get in on this G area here, or here, right where I have them marked here and here. So what's nice about that to me is that it has you getting in above these sellers down here. So if you're using the histogram the way that I am, you could get in long above the high volume clusters of sellers, or you can get short under the high volume clusters of buyers. And I'll show you what I mean here in just a second. So if you buy this, obviously you're pretty happy about it because it takes off. But let's say you didn't. You were nervous and you didn't think it was going to go. We can take pullbacks. Every time it comes back to the high value area here, or even here. So you can see it moves higher, but it trades back down to that high value area. So that could be a buy as a pullback, which would be right here. If you're still worried about it, trades higher, then it pulls back again to that high value area, and that would have you getting in right here. Now what I like about that is that you can see you have a high concentration of sellers here, but nobody steps in under that. So you're looking at 224, 233, And then under that, you're looking at 84, 41, 23, 0. So that, in my mind, is saying, okay, the sellers aren't stepping up under that area, so I can go ahead and take that buy and see if we can get up to that next high volume area, which would be up here. So like I said, you didn't take it here, you didn't take it here, you didn't take it here, you didn't take it here. You still have time. Maria, are you here answering questions? Okay. There's a couple there. I think, are you looking in the big question box? Okay, great. Okay, wonderful. All right, so I'm just going to flip to the next screen because this is the same area as here, right here. I just have it on the next slide so I can talk a little bit more about this. So I don't trade on news. So this, right where you have this blue box is right around news, and I drew that on there and put news there. So that for me is generally a time that I won't trade. I'll trade right after the news, and usually I'll wait. I'll stop trading usually 10 minutes before, and not because I'm afraid of the news or I'm afraid to take an entry around news. My concern for me personally is having huge slippage if my stop gets hit. So, you know, that's my preference. Lots of people trade around the news. So, you know, you have to decide what's best for you. But when we get to, this you can see it a little easier here, when we get up to these new highs, technically you can short the tops on those. Now, I would never say do that into news, but if there was no news, you can short the tops of those areas as long as you have sellers coming in. So here on H, now for me, I would be looking for divergence in order to take a short off the top, and I'll show you in just a second how you can do that. But right here at H, when we come back to this high value area and it doesn't hold, it actually trades through it. Right here is where it is on the order flow chart. You can see that we have a high number here for our delta, and it's positive. So this, I'd be a little cautious on taking because this is a big high reading showing that we have a lot of buyers there. So I would be a little concerned about taking that as a short there. Now, what we want to see is we want to see that getting smaller if we're going to try to take a short off the top or a short off the high value area here. And as mentioned, this is news, so anything can happen on news, but I'm just going to go through it and, you know, you can decide what you want to do. So here where we break outside the high value area again, and right here on I, which is right here, this would interest me a little bit more only because we had this high delta here, and this is the bar that is forming on our order flow chart. Right here I have I marked, and we're still positive, and we're sticking with the overall direction, at least at this point. And so I could buy that there, and it works out, you know, into the news. You end up maybe with 4 or 5 points on that. And if I was in that, what would be going through my head is, okay, we're going from 675, this bar finishes here. Okay, now the next bar is starting to form. We had all these buyers in this level here at 750, I think that is, but nobody's stepping up above that. So we're looking at here 198 buyers, 89, 147, then it goes to 37, 34, 14, 25, 15. That's going to give me a heads up that, hey, the buyers aren't stepping up here. So I would be a little probably cautious on that and maybe tighten my stop or take something off, especially on the next bar here. And this is right here in this J area here. Right here, the same thing, right where we've got this high value area, you can see where this brown line is here. We still don't get the buyers stepping up there. Now this is just after news, but you can see we get big green here showing lots of buyers, and then not so much, right? It goes 317, 248, 160, 173, 170, 26. So now we've got 2 bars forming this one formed, this one's forming, and they're not piling in up here. And looking at my chart here, you can see where we're pulling back, still around news. It's like 10:01 here, pulling back to the high value area here, which is right here, in this area right here. So with that said, I'd be a little concerned about staying in this long. So I can watch now for a break of the low value, the high value area here, coming back into this blue section here, and I can short. This is still news. This is right at 10 o'clock, so not interested. But as long as you've got sellers coming in, you can still take that. Right here at J, right here is where that sets up. Now I can take this as a buy, but here's my concern. My concern is still the same, is that I have 721 back here, 675 here. This one here, previous, is getting smaller. You can see we don't get the buyers stepping up here. So I would be a little bit leery about trying this as a buy again. If I was going to buy this again, I would look to my left and see where price was holding, and I would determine if there was enough space to take that. Now this is what I look for when shorting the top. So you can see here, even all through this area here. Now on news you can't count on this, so I wouldn't say short the top here where we've got right here higher highs on price. Well, here on the stochastic we've got lower highs here than here than here, because usually we are going to get a pullback. But on news, you know, anything can happen on news, so I wouldn't count on it. So after news, we get the bounce here. We still don't have the buyers coming in, but now I've got equal highs on price here, 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 all creating equal highs, while my stochastic is giving lower highs. So that's giving me a heads up that, hey, I can short that. As long as I've got sellers coming in, I can go ahead and short that. So right here where K is marked on my VWAP chart, that's right here. And what's nice about that is getting us in under all these buyers here. So the buyers couldn't push it up here, they couldn't push it up here, and we're getting in right under all those buyers. So what would be going through my head is, okay, I can take that as a short. Then my first area where I'd probably might get stuck is, you can see we've got this high volume area here right at our high value area, right at the edge of our yellow spot here. So that would be the first area that I would be thinking, okay, I might wind up getting a bounce there, so I probably would take something off. You know, if you're trading multiple contracts, I'd probably take something off, and then I can trail if it decides to keep moving. If you didn't take it here on K because you were afraid because it was pretty strong leading up to that, then you can take it here where I've got it marked L, coming back into the fair value area. Now, like I said, a lot of people don't like to trade in that fair value area, but I don't mind. As long as I have a setup and I have an idea where price is going to get to, I'm okay with that. So in looking at this, you can see if you take this short here at L, which is right here, right at that spot there, just under that orange area, that's our high value area line being marked, then I probably will have a good chance of getting to that next high volume node right there. Can you see that? So if I take it here, I would expect it to find its way here. Basically, that's telling me the next area of support. I'm seeing Jim's question there and I don't understand. I think Maria's going to get it. All right, so I'm going to go over to the next chart here. And then, of course, our delta is negative, then it gets bigger negative and bigger negative, right, you know, where we're getting in there on L. So I'm okay with that. So right here's where that L area was. And so if you were concerned about taking it here when it first broke, you get another chance here, right? And if you still didn't take it, it retraces back up to that high value area right here. You can see it here and here. And so now you can still take it because look, we still have negative delta here, still negative delta here, and this is still getting us in under the area where we had this big green level here of buyers that were not able to push it up. So you could take that as the short. Now there was news or something. This wasn't scheduled news. There was a couple things that came out unexpected, and this dropped like a ton of bricks. So, if you got in it, you are really happy you did, because I mean, in a matter of, a couple minutes, it dropped completely to the other side of the fair value area here. So you can see it went from one side to the other side. So let's say that you didn't get in here and you didn't get in here. You could get in under this blue area. Now this one would be a little tougher for most people because of the fact that it's right at that point of control, which price can often hold in that area. But the good news is that you can take the short as long as you've got sellers coming in and use a pretty tight stop on that. You can use a few ticks or a point above that area, and then you're not risking a whole lot. And then the hope would be that you could trade back down to the other side of the fair value area, to the first low value area here, right? And so after a move like this, I would start thinking, okay, we're definitely due for a pullback. But technically you could take a break here of this low value area as it comes outside the yellow area. And it probably works for 3 points or so. And as long as you've got sellers coming in, and we still have sellers, and I'll show you on the next bar, but as soon as you see the buyers come in, you're going to want to either tighten your stop or take some profits off the table. Just be aware of what is going on around you. Where's price likely to get stuck? And remember, we talked about earlier where oftentimes price will hold at the edges of those fair value areas before either breaking out or rolling over. So consolidate and roll over, or consolidate and break out is usually what happens in those areas. So here's that area. Now I've got it marked up so you can see it a little clearer. See, this is the same area that I have here, but this is just showing the whole section here. So here's where I said you could take a short right here at O, which is right here, right where this orangey line is right here. And we still have big sellers, but keep in mind, this just came a long way. And like I said, if you took it, it worked out for like 3 points. And then as it's coming back in, if you had buyers coming in, you could take the bounce on that, either off the low here. I wouldn't take it for myself unless I had divergence. I'll show you where I would be willing to take it. But you could take the buy coming back into the fair value area, or the break of this previous value area from yesterday, as long as you have buyers coming in. So O, you take the short as long as you've got sellers, and we do. Now, if I was in this on this O mark here, I would be thinking, okay, where are the sellers? Why aren't they coming in down here? So I would be a little bit hesitant once I'm in and they're not piling in down here. So the next bar starts and it consolidates a little bit, and then you see that you're getting positive delta and still no sellers in this area. So that would give you a heads up that you might want to get out at break even, or like I said, if you had a target sitting there, you probably got 3 points. And I wouldn't be interested in the buy unless I had a bunch of buyers coming in here at P. And realistically, in comparison to our previous 5-minute bar, our delta is pretty small, but it's positive. But I would just likely wait until I saw a bigger number coming in. So I would just let it kind of meander here until I saw this delta on this 5-minute bar is getting a little bit bigger here. So you can see it goes from 30 to 358. You can see it down here. And so when this retraces again back to this low value area right here where I have it marked Q, I can go ahead and take that, or I can wait to see if I get another retest, because I still am not really seeing like a whole lot of buyers, but the good news is that I'm not seeing a whole lot of sellers either, right? So what I could do is I could look back over here and I could see right here at this level at 84, I had a whole lot of sellers coming in. So I could put my buy order, if I wanted to get in above the low value area here, I could put my buy order in above this big volume cluster of sellers. And then it just kind of bounces around there and it works. I mean, you get 3 or 4 or 5 points out of it, and then it retests the low value area again here. And once again, if you have sellers coming in and you want to take that short under the red area here or under the low value area, you certainly can. And that is right here. But once again, my concern would still be the same because I'm still looking to the left. And yeah, I've got negative delta, but still no sellers coming in under that low value area. So what I would be looking to do is, as this is consolidating, I would be looking maybe for a breakdown under this horizontal line, and I drew this horizontal line, so I can look for a breakdown under that as long as I get sellers coming in. But in looking at this, we're testing this low value area again and then again, and you can keep trying to buy it or sell it as long as you've got the positive delta for the buys or buyers coming in, or negative delta and the sellers coming in. But now when I see this, I've got a lower low here, then here, and my stochastic, I've got divergence. So I would be looking to buy that. So for me, that would be a buy right off this bar here. And so I'd wait for this bar to close and I would be getting in above that bar. And that would be right in this area right here. It would be above this spot right here on this next bar. So I would be happy to take that as a buy. And then what I would be looking at is, again, look to my left, this last bounce here held this area here at 90. So I would be expecting hopefully a bounce up to 90. And then if it can get through that, I'd be looking at the point of control and then the previous value area. So I'm going to flip so you can see the next screen. So this will continue in that area. So right here is where our divergence was, right here. So we get in there, or you get in above the red area here, and we get our bounce. So like I said, you get in here, you get in here. Here, I wouldn't get in around the point of control, but here, if you didn't get in either one of these areas, buying the divergence or buying the break of the low value area or the red area, once it trades up to the this blue line here, the previous value area from yesterday, I can take a break of that, and that's right at S. Now, if you're not convinced that it's going to easily get through that, you usually get another couple opportunities. So here where it breaks on S, I have it marked right here, right? You can see that level right there. I've got positive delta, so that's good. And the good news is that we don't have sellers stepping in, but we had a big blob of sellers right here. So I would prefer to get in above that cluster of sellers there. So I could place my order, above that. And granted, like I said, this is static, so it's easy to see after the fact, but while it's forming, and I'm going to hit the market replay here in just a second so I can show you that before we run out of time. But I would be looking to get in above that. Now, just like before, if I get in above this area here, as mentioned here, I would be looking at the volume. So we can see previously we had high volume cluster here, which is the same as this here. So if I take this, I would be thinking to myself, okay, that's probably where I'm going to get stuck. And then if I can get through that, then I'm probably going to get through to the next high volume area, which would be here at the high value area. So I can take that as a buy right here where I've got it marked U, which is right here above this orangey ribbon here. And I can take that as a buy, expecting, hopefully, to find my way up to the next high value area, which is right up here. And if you didn't take it because you were scared or you didn't think there were enough buyers coming in, guess what? You get another chance right here. When the next bar hits that, You can have your order sitting right there because now maybe you're convinced, right? So it pops, and now it's consolidating again. Now this is what I drool for. I drool over these divergence trades. So now I see hitting that high value area, second high value area, and you can see it right here. And now I've got divergence again. I've got higher highs on price here than here, while I've got lower highs on my stochastic. So I am happy to take this under this bar here after it forms, expecting probably that worst case scenario is that I'm going to get stuck down there at this high value area. And so let's see what happens. So there was the V right here, right? UV. And then here is W. So if you didn't take the divergence, you get an opportunity to take it short here. Right here I've got it marked W, and that would be right here. And then once you're in, you can see that we get a large number of sellers coming in under that, but then it doesn't really get pushed very low. And then the next bar, it pops up again. But it still doesn't stop you out. But then we get positive delta, right? So we had negative delta, positive delta. So you're thinking, okay, I don't know. I don't think I want to take that short. So you're going to buy it. So if you buy this because you had the positive delta, and this is the bar that's setting up, right here I have it marked X, right here, and then you don't see the buyers come in. Now keep in mind, look at the bar next to that. So this is the bar that's forming when you get this X, right here where I got it marked X, thinking you're going to take the bounce. And you look at this bar previous and you see all these sellers right here. So what would be going through my head is that, okay, if I take this as a buy, I might get stuck right there where we had all those sellers stepping up. So that's what would be going through my head if I take that as a buy. And then so if you take it, you know, no big deal. You have a pretty tight stop if you're going to use under the high value area there. And if you don't, then you get stopped out. You know, nothing's 100%. You have to remember that. Then as it comes back to this low value area here, I don't have it marked, but you can take that as a short right here, right there on that bar there. And that would be what at like 325. So let's see where that is, 325. And what time was that? That looks like that was around maybe 11:01, 11:02. So it would be on this bar here that's forming, where you think you're going to, you know, take that short in there, right there, same area as that X. And, you know, going through my head would still be the same thing. You know, I've got buyers and then no sellers stepping in. So you can wait until you see the seller stepping in. Like I said, in the areas of those fair value, high values and low value, you usually get a couple different opportunities to get in if you're not convinced when it first hits it. So now it tries to go higher and it fails. It tries to go higher and it fails. Doesn't hit the high value area here. So now you're thinking, okay, well now maybe I got a chance here. I'm going to give this a shot because it's just not going. Because now you can see right here I've got it marked Y. This is bars forming at that time. And we can see that we didn't get any buyers stepping up above that high value area. So now you're thinking, okay, I'm going to try that short. And so now it works. And not that none of these, taking any of these wouldn't have worked for a short. You just would have had to sit through the, you know, the chopping back and forth until it decided what it wanted to do. And just like before, you take the short, you're looking at the high value, the high volume node here, thinking, okay, that's the first area I'm probably going to get stuck. Then if it can go, I'm looking at the next high volume area, which falls in line with the point of control. So it's just the same thing over and over and over again. And it takes practice. I'm not going to say, you know, you learn this in 5 minutes, but the beauty of market replay is that you can practice. So I'm going to just, oh, I got one more here. Here off this previous day's high value area and the point of control, what do we see? We see divergence. So I would be happy to buy that right there. This is where it's setting up, and you can see it comes down to the point of control. That's what this is right here, this purple line. And we don't get a bunch of sellers coming in. we still have positive delta on this bar here that's forming. So I would be willing to take that as a buy off of that area because I've got divergence to the upside. I've got lower lows on price. Well, on the stochastic, I have a higher low here than here. So I'd be expecting a bounce. Worst case would be, again, up to this volume node, right? And then best case would be back up to the high value area. Now I'm gonna, I just want to do this chart replay real quick for you guys. But before I do, the order flow tools that you're looking at right now come with divergence delta, market profile plus. These are all the indicators that are on the charts that you just saw, and they come with the package. And with the package, you get 6 months free training in Maria's training room, which is open Monday to Friday, 4 a.m. Eastern till 11:30 a.m. Eastern. And anybody who orders the tools by Friday midnight, she'll give $300 off the package and free installation for the software, and she'll give you free chubby bars, and I'll show you what that is. So if you have more questions or you're interested in this special that Maria is offering until Friday, then just send her an email at tradetheeminis@gmail.com, or you can go to tradeorderflow.com and just fill out the form. All right, so what I want to do here is I just want to close this down here, and I want to bring up my two Ninja charts, and I'm going to hit market replay here so you guys can see what it looks like as it's forming. So I'm just going to hit play, and I just need to give it a second here to load. All right, so I'm going to just speed it up. So I'm going to make it play. This is like playing 10 times faster than the market, okay? Oh, actually, I'm going to slow it down just a little bit so you can at least see what it's doing here. Okay, so this is playing 2 times faster than the market. So here is the action bar. This is what I was talking about earlier, is that we can see the more aggressive orders coming in here. So this is constantly moving. The delta is constantly changing on this bar here and this bar here. And so here you can see it coming up to that next high value area. And looking at this on the bid-ask histogram, I find it really easy, but here's the other options. So I've got the bid-ask histogram. You can look at it as bid and ask, which still gives you some color concentration in the higher volume areas. You can look at it as a bid-ask ladder, and it will give you a square in the area of the price level that had the highest volume. And you can look at it as a delta, just giving you the delta. So lots of different options there. Also, you have the ability to look at, which is part of the package, you can look at areas where aggressive buyers and sellers stepped in. I don't have that marked. Also, the Fibonacci retracements, also you can have marked on your chart. There are lots of options, and it's as simple as me just clicking the show, and then I can choose what I want to show. I can use, it will mark unfinished business. We haven't seen any of those yet, so I can't really give you an example of that. But like I said, this makes it very easy to see for myself anyway, the different ways that the different levels that the price volume is coming in here. And also with Maria's tools, I forgot to mention, is that you do get 2 boot camps each month as well, where she requires you to do a chart replay and record it, either in Sim or your live account, so she can make sure that you are understanding the methodology and that you're getting it, basically. Right here, Caroline, on the action bar, this is like the more aggressive orders coming in. And so I'll watch this, and then what it does is it'll take them and put them over here on this other bar that's forming. So this is the action bar. So if you put enable your charts so you can see the action bar, this is, like I said, where you have the more aggressive orders coming in on that action bar. And this is right before news, so this probably wasn't the best time for me to choose to show you guys. Maria, did you want to take the mic? Did you need to say anything? And this is being recorded, you guys, so I'll be happy to get it posted for you guys. Let's see. Do you use 8 range charts for E-mini? I personally, like, what I do is I use these charts and the order flow in conjunction with my own setup that I use, that I trade. And so I personally take my entries off a 4 range chart. But like I said earlier, it doesn't really matter what you trade it off of if you're trading the value areas, because you're trading the value areas regardless of what size bar you're looking at. The levels are all going to, the value areas are all going to be the same. Where what you do need to focus on if you're trading off a 4 range chart, of course, is, you know, the delta and, you know, buyers and sellers coming in. All right, so anybody else have any questions? Maria can use the mic if you guys need her to. It looks like she's been doing a good job answering all those questions via the keyboard. Okay, well, I guess you guys just got all your questions answered, so you don't need any more, right? Well, great. Well, if something props up, I'm having a hard time speaking. I'm like so tired right now. Then send myself or Maria an email. You are very welcome, Jim, and we'll be happy to answer any of your questions if we didn't answer it. And you know, what's nice about incorporating this in with whatever setups you use is that you can pay attention to the different levels, and you can pay attention to the order flow, even though you might be trading additional setups than just the breaks of the high and low value areas. So there are lots of ways that you can make use of this, and you're seeing one person's opinion, mine. All right, you guys, well, I'll just stop recording here.